Hello everyone and welcome back. We are doing simulation. I think we have done around 3 questions if I'm correct. Let's continue into the next set of questions. So like I told you, the basics of the question will always remain the same. There will be some data given to you and the probability of that will be given to you. That will be sometimes demand, sometimes production, sometimes maybe they might give you supply, they might give you revenue, they might give you cost of something. And that data, which is the cost, the revenue, the production time, will be a probabilistic value. It is not 100% that that data will appear. It might appear with a certain chance. The data and the chance of that data occurring will be given to you, and a set of random numbers will be given to you. Step 1, write down the data, write down the probability of that data. Well, again, the probability might not always be given to you as probability. It might be given to you as frequency, which is number of times that it occurs. And they might ask you to change the frequency to probability, or we will have to change the frequency to probability. So data, probability of that data, we will take a cumulative of that, we will create a range, and then whichever random number fits in that range, for that range we will check what the data value is and we will predict it for the given number of random numbers. So that first part remains the same. What might change is what they expect you to do after the prediction. Like for example, in the first question, they asked you to predict the demand and then take an average demand. That's it. Then that one question where they asked you to predict the production, and then there was another calculation. And the calculation was the cars that you are making are transported from one end to another with the help of a ferry or a boat. And then there were a certain number of places available on the boat. If you produce more than that, then you will have a vehicle waiting to be shipped. If you produce less than that, then you will have an empty space. They asked you calculate the average number of empty spaces and average vehicle waiting for, I think, a 15 or a 20 day period. The next question that we are going to do, like I said, the basics will remain the same. What they ask you to do after that might change. Let's look at the question that I want to do. The question that I want to do is question number 2. In your module, it is page 95, question number 14. What does the question read? The question reads as: the manager of a bookstore has to decide the number of copies of a particular tax law book to be ordered. So what does the manager want to decide? That there is this tax law book. Now you know what a tax law book is, like the laws related to taxation probably. So it's a tax law book that he is wondering how many to order. The book costs rupees 60 and is sold at 80. Okay, so if I buy the book, it is going to cost me 60 rupees, and whenever I sell it, it is going to give me a revenue of 80. So can I basically say the give and take is a profit of 20 rupees? Yes. Since some of the tax laws change every year, any copies unsold while the edition is current must be sold for rupees 30. Okay, so let me understand this. Since tax laws change every year after year, true, we all know that, and you all study taxation, and whether it is direct tax or indirect tax, whether it's GST now that you study, whenever the government comes up with a new budget, there is a chance that in the new budget they might ease on a few taxes and they might make a few taxes heavy. For example, vehicles might be heavily taxed, but food and food grains might not be taxed as heavily, and so on. Now, because that happens, if you have a copy of this tax law book which is unsold, what do you mean by unsold? You don't sell it in that year. Then you will have to sell it for rupees 30. Why? Simple. If I come to buy the book from you, I will obviously ask you for a book that is giving me all the current applicable laws or amendments. Why would I want to know what was happening last year? But sir, he's still selling it for 30 rupees. I agree, I'll tell you why. What happens is when tax laws change, they don't change completely, no? It's not like last year, whatever the taxes, what the laws were, are completely changed and all new laws are implemented. That very hardly happens. What they do is they keep changing a few amendments and they come up with these new circulars that, oh, these amendments have been changed. So what you can still do is you can buy the old book and then find out what are the new changed amendments. The government will definitely issue them and just make those changes. So can I say you get the book for much cheaper? But very few people will be willing to do that. Anyway, if anybody is willing to do that, if anybody comes to buy the book and says, how much is this for? I tell them 80 rupees. Or they say, oh, it's a little expensive. I tell them you have another choice. I have a book from last year. You can take that. I'm selling it off for 30 rupees. But when I bought that book, I bought it for 60 rupees. And I'm selling it off for 30. Isn't it an indirect or let's say direct loss for me of 30 rupees? So whatever I read, can I put it out as a whole and say, if I sell a book, 20 rupees profit. If I don't sell a book, 30 rupees of loss. True. Past records, the distribution of demand for this book have been obtained as follows. So the minimum demand of this book has been 15 copies and the maximum has been a total of 22 copies. So the demand will never be lesser than 15 and never cross 22. Okay. Proportion is given to you. Now what is this new proportion? Well, proportion is nothing else but probability. So in 100% proportion, in what proportion is 15 copies sold? So if you notice 0.05 proportion, which in other words is 5% probability. Correct? So there is in 100% chance, there is 5% chance that 15 copies are sold. Or in 100 times that you sold the book, there were 5 times that 15 copies were sold. Anyhow that you want to look at it. What I want to tell you, bottom line is, proportion and probability is the same. There is nothing different in proportion and probability. Using the following sequence of random numbers, generate the demand for 20 time period, and the period here is an annual period or year. Always remember to check. They have asked you to generate for 20 time periods. So if they have given you more than 20 random numbers, you will skip the last. You will only take 20, the first 20. Let's see how many random numbers have they given us here. Well, the number of random numbers that they have given us here is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Correct? 11, 12, 13, 14, 15, 16, 17, 18, 19 and 20. Perfect. They have given us 20 random numbers and 20 periods is what we have to predict for. So we have to use all the random numbers. Let's go back. The manager of a bookstore has to decide the number of copies of a particular tax law book to be ordered. The book costs rupees 60 and is sold at rupees 80. Since some of the tax laws change every year, any copies unsold while the edition is current must be sold for rupees 30. From past records, the distribution of the demand of the books has been obtained as follows. Demand and proportion. Using the following sequence of random numbers, generate the demand for 20 times. Calculate the average profit obtained under each of course of action open to the manager. Okay, so there's a lot to do. But I know one thing. Until and unless I predict my demand, I'm not going to move ahead from there. So later what has to be done can be gauged after I have done that. For now, step 1, write down the demand, write down the proportion. Step 2, cumulate the proportion. Multiply it by 100, but in your head, create a range. Use the random numbers. Check where that random number fits in which range. Predict the demand for 20 periods, and then we will come back to the question. So let's begin with the question then. The first thing that I'm going to do is I'm going to get my table ready, and it's going to take a little bit of time, so I don't want to waste. So I will quickly come back with my table. Here my table is ready. What is this? It is the demand, and this is the proportion or the probability of the demand. What is going to be my first step? My first step is going to be writing down the demand, writing down the proportion, but I am going to call it the probability. I am not going to call it proportion. Let me zoom in a little just in case. You find it a little difficult to read. So demand, probability of that demand. After that, I am going to cumulate the probability or find a cumulative probability, and at the end of it, create a range out of the cumulated probability. Let's begin. 15 to 22, 15, 16, 17, 18, 19, 20, 21, 22. Probability 0.05, 0.08, 0.20, 0.45, 0.10, 0.07, 0.03 and 0.02. Cumulative probability is going to be 0.05, add 0.13, 0.33, 0.45 plus 33 is going to be 45, 55, 65, 75 plus another 3 is going to be 0.78, 0.88, 0.88 plus another 7 is 95 if I am correct, 0.98 and 1. This should always become 1. If it doesn't, then you've made a mistake somewhere. Let's start creating a range. So first, multiply this by 100, but in your head. You don't need to show it. I'm going to start from the number 0 and end one number before 4. 5 to 12, 13 to 32, 33 to 77, 78 to 87, 88 to 94, 95 to 97 and 98 to 100. Done. We have all this ready. Now I'm going to draw a new table, and in that new table I'm going to say this is yearly data. I think so. Let's check once again. Number of copies of a particular tax law book. Year. Okay, it's a yearly tax law book. Basic common sense. I'm so sorry. So it's yearly data. So I'm going to write year 1 to year 20 because we have to predict this for 20, and after that for those 20 years we will start with writing down the random numbers and predicting the demand with the help of that random number. Now the problem is I don't think 20 will fit here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. No, doesn't fit. So I'll draw it on a new table. We'll quickly come back. Here, I have my table ready. To begin with, I have to predict the demand for 20 periods using 20 random numbers. The first column obviously is going to be the year 1, year 2, year 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19 and 20. It's going to be a rather lengthy question. Let's come to the random numbers and let's quickly write down the random numbers. So the random numbers are 14 to 93, 99, 18, 71, 37, 30, 12, 10, 88, 13, 0, 57, 69, 32, 18, 8, 92, 73. I have written down all the random numbers. Am I right? Let's start the prediction. So luckily I have done this on 2 independent pages. So I can use both together to do my prediction. So let me put this side by side so that I can use both. Perfect. Nice. Random number 14. Well, 14 falls here in 13 to 32. 13 to 32, the demand is 17. 2 will be here. 15. 93 will be here. 20. 99 here. 22. 18 will fall here, which is 17. 71 will fall here. 33 to 77, which is again 18. 37 will be here, 18. 30 will be here, 17. 12 will be here, 16. 10 will be here again, 16. 88 will be here, 20. 13 will be here, 17. 0 will be here, 15. 57 will be here, if I am correct, 18. 69 will be here, which is 18. 32, which is here, will be 17. 18 will be here, which is 17. 8, which is here, will be 16. 92, which is here, will be 20. And 73, which is here, which is 18. Done. The prediction of the demand for 20 time periods. Now, usually the question would be find the average demand and they would finish it off. But here that is not the question. Here they are not asking you to find the average demand. If that was the case, I would take a total of this, the predicted demand for 20 periods and finish it off. They are expecting something different from you. What are they expecting? Let's go back to the question. So, what do they want from you? Well, the first line of the question very clearly says that they don't want you to predict the demand and give you an average demand. The question is, the manager of a bookstore has to decide on the number of copies of a tax law book to be ordered. So the problem is that you have to tell the manager how many copies to order. Well, on the basis of what are you going to take that decision? Well, obviously, I could have taken an average and told him. But I can't just to do that. Because what they have done is, they are asking you to suggest him. And then, they have told you that selling one book gives you a profit of 20. An unsold book is a loss of 30. And what are they saying? They are asking you, if you read the second line, calculate the average profit obtainable under each course of action. Oh, so you have to tell him how many books to keep and then check how much profit does he make with that option. So see, the demand is from 15 to 22. Is that right? So if the demand goes from 15 units to 22 units, he can stock anywhere between 15 to 22 units. And exactly that is what they are asking you. They are asking you how much should he stock. Let me do one thing. Haven't I just predicted my demand? Yes. Then look at the predictions, no? Look at the predictions. What is it that you see a lot of times? Well, when I look at my prediction, 17, 15, 20, 22, 17, 18, 18, 17, 16, 16, 20, 17, 15, 18, 18, 17, 17, 16, 20, 18. Do you notice something? If just for my understanding, I write this down with a pencil, and that is 15, 16, 17, 18, 19 and 20. Okay, in the total of these 20 cycles, how many 15s do you see? Well, 1, 2, that's it. I see 2 15s. How many 16s? Well, 16s are 1, 2, 3. There are 3 16s. How many 17s? 1, 2, 3, 4, 5, 6. There are 6 17s. How many 18s? 1, 2, 3, 4, 5 18s. How many 19s? Well, no 19. Okay. How many 20s? There is 1 20. There is 2 20s. There is 3 20s. Am I right? Yes. 21, 22. How many 21s? Well, I don't see any 21. How many 22s? 1. That's it. I think there was just 122. Check if the total is 20, because if it is, then your calculation is correct. Otherwise, there's something wrong. 3, 4, 5. 5 plus 6 is 11. 11 plus 5 is 16. 16 plus 3 is 19. 19 plus 1 is 20. Perfect. What do you notice? What you notice is the maximum number of times what you see is 17 and 18. Is that correct? So I will ask him to stock 17 or 18. Ideally, you know what I should do? I should ask him to stock 15. Calculate the profit for 15. Stock 16. Calculate the profit for 16. Stock 17, calculate the profit for 17. Stock 18, calculate the profit for 18. Stock 19, calculate the profit for 19. Stock 20 and calculate the profit for 20. But I'm not going to do that. Because A, it is too much to do. And B, if you notice, the maximum demand you see is around 17 and 18 units. So I can calculate, or I will calculate. See, the demand 20 is only seen 3 times. So out of a total of 20, you see the demand 20 only 3 times and the demand 22 once. Rest all the time the demand is below 20. If the demand is below 20, do you agree? Then a lot of times I will have unsold copies. Then I will have to incur a lot of losses. On the other hand, because there is a demand of 16 only 3 times, but there is a demand of 17 6 times, 18 5 times, 23 times and 22 once. If I stock 6 books and the demand is 20, what will happen? I will sell all 16 books. But the demand is 20, which means you know what will happen? 4 people will come to ask for the book and go. They will not be satisfied with the demand. But that's okay. Have they said anything about an unsatisfied demand? No. Can they say anything about an unsatisfied demand? Yes. What might they say? You know what they might say? They might say that if you have an unsatisfied demand, you have to incur an indirect loss. Why? Simple. If I don't stock a book and the customer comes to me, I tell the customer I don't have this book, the customer starts going to another person. If this happens with the same customer 2 to 3 times, the customer will eventually stop coming to you. The customer will say, इसके पास कुछ होता ही नहीं है. Or, and this you will agree with me and must have happened to you at some point of time in life. There is this particular product that you use. You've been using for years together. It could be a shampoo, it could be a soap, it could be a face wash, it could be a pen for that matter. You have been using that pen for years together. This time you go to the shop, but the shopkeeper says that pen has been out of stock for a while now. I don't stock that pen anymore. The company is not supplying the pen only. What will you do? You will say, fine, till the company doesn't bring in the pen, I will stop writing. All my writing projects will stop. I can't do that. I will buy another pen. What if you tell the shopkeeper, can you show me similar pens that I used to use? So I used to use a gel pen which is a 0.7 thickness to it. The owner will say, yes, I can definitely show you different pens. See, this is another pen which is almost the same. You buy the second pen and you start liking the second pen. You never go back to the original pen. Isn't it a loss to the company? Another way of looking at it is, if it's a pen and the person says that this pen is going to come back in 3 days, you might wait also. But if it is your birthday today and your parents have promised you a cell phone, you go out to buy a cell phone, you go to, let's say, a Vijay Sales or a Chroma, and you don't get that cell phone. Do you just come back home? No, you go to the next store. You go to the next store because you want to buy a phone and come back today. Isn't it an indirect loss of sorts? But have they said anything about that in this question? No. There might be questions that they might say, if you sell that product, you get a profit of 20. If you don't sell it, you get a profit of 30. You get a loss of 30. So you say, oh, let's not overstock, because overstocking will be a great loss. Let's understock. But then what if the trick is that they say, if you understock and a lot of time a customer goes back with unsatisfied demand, it is going to be an indirect penalty of 10 rupees. Oh, so if I stock extra also there is loss. If I stock less also there is loss. Here there is nothing like that. Here there is only one criteria. If there is unsold books, which means if you are stocking extra than required, it is going to be a loss. If you understock, it's not a problem. If you overstock, that is a problem. And that is why I will not predict for 20, 21, 22 for a simple reason that when the demand gets higher, I will not be able to sell those many books a lot of times and I will get a loss. So I will do for lower. What can you do for? Try 15, 16, 17, 18. Don't do 19, 20, 21, 22. Ideally, should you? Yes. but that's too much to do, and that is why we won't. So I will start assuming or predicting that my demand is 15, that my demand, that I have stocked 15 books, stocked 16 books, stocked 17 books, stocked 18 books, and see what works out. So I will quickly come back with the table drawn. So done. What am I going to do now? See, what is going to happen is I make a profit if I sell a book. I incur a loss if I have unsold books. So what I'm going to do is I'm going to imagine, or I'm going to assume that I'm stocking a certain number of books. And then if these are the demands, how many books are unsold? Because that is what is going to define the profit and the loss, sold and unsold. So I'm going to say number of books unsold if number of books stocked are 15, 16, 17, 18. Let's start with 15. What am I going to do? Imagine that you are running the shop and there are 15 books in the shop. Okay. What is the demand for that year or the first year? Well, the first year demand is 17 books. How many do you have in stock? 15. Will you be able to sell all 15? Yes. Will there be any unsold book? No. Then if I stock 15 books, in the first year, the number of unsold books is 0 or dash. If I stock 15 and the demand is 15, all are sold. If I stock 15 and the demand is 20, all are sold. If I stock 15 and the demand is 22, well, all books will be sold that I have stocked, because 7 people will come and go back saying that the book is out of stock. The question is, will I be able to sell all 15? Definitely yes. There will be no unsold book. Will I be able to sell 15? Yes. Will I be able to sell 15 if the demand is 18? Yes. Will I be able to sell 15 if the demand is 18? Yes. Can I ask you something? Isn't the minimum demand 15? The demand never goes below 15. If the demand never goes below 15, if I stack 15 books or if I stock up 15 books, it is never going to happen that I have an unsold book, because the minimum demand is only 15. The demand never drops below 15. If you stock 16 books, there is a chance that the book might be unsold if the demand is 15. So again the same. How many books are you stocking? 16. What is the demand? 17. Will you be able to sell all the 16? Yes. Will you be able to sell all the 16? No. I am stocking 16 books and the demand is of 15 books. I will have one unsold book. Will you be able to sell all 16? Yes. 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 Yes, 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 no. There will be one book left. So can I say, if the demand is more than or equal to what I have stocked, good idea. Less than what I have stocked, there will be books left. So wherever there is 15 or less, there will be pending, otherwise no pending. So dash, 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 dash and dash. Let's come to 17. If the demand is 17 or more, fantastic. Less than 17, bad idea. Yes, less than 17. How much less? 2 less. So 2 dash, 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 1 less than 17, 1 less than 17, dash, dash, 2 less than 15, dash, dash, exactly 17, exactly 17, 1 less than 17, okay, dash and dash, more than 17. Anything more than 17 or more is a good idea. Similarly here, 18 or more is a good idea. Anything less than 18 is bad. Isn't this 1 less than 18? Isn't this 3 less than 18? 18 or more, 18 or more, 1 less than 18, 18 or more, 18 or more, 1 less than 18, 2 less than 18, 2 less than 18, 18 or more, 18, sorry, 1 less than 18, 3 less than 18, 18 or more, 18 or more, 1 less than 18, 1 less than 18, 2 less than 18, 18 or more, 18 or more. And these are, if I maintain a stock of 15 books, there is no book that remains unsold. If I maintain a stock of 16 books, there will be quite a few places where there will be unsold books. If I maintain a stock of 17 books, there will be places where the book is unsold, and so on. Can I do this in another way? How? Remember, I wrote this, and that is demand. Sixteen, 17, 18, 19, 20, 21, 22. Correct? And the frequency. So 15 is twice, 16 is 3, 6, 5, dash, 3, dash, 1. If I stock 15 books, well, the demand is always more than 15, so no unsold. What if I stock 16 books? If I stock 16 books, there are two times when the demand is less than 16. I won't be able to sell all 16. Let's check. Once here and once here. What if I stock 17 books? Well, there are two times when there is a demand of 15. So here you will be left with one book. And there is three times when, here you will be left with two books. And there is three times when the demand is 16, you will be left with one book three times. So check if you have two 2s and 3 1s. So 1, 2, 2 2s and 3 1s is going to be 1, 2 and 3. If you stack 18 books, what is going to happen? There is going to be two times that the demand is 15. So you will be 3 books unsold. Twice. If the demand is 16, there will be 2 books unsold 3 times. 17 6 times. So there will be 1, 2, 3, 4, 5, 6. There will be 6 1s. Let's check if there are 2 3s, 1 and 2. Let's check if there are 3 2s, 1, 2 and 3. And let's check if there are 6 1s, 1, 2, 3, 4, 5 and 6. Perfect. Let's take a total number of unsold books. So when 15, there is 0 books unsold. When it is 16, the number of books unsold is 1, 2. When it is 17, the number of unsold books is 2, 3, 4, 5, 6, 7. And when there are 18 books, the number of unsold books is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. Which you could have checked here also. 3 plus 3 is 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. Perfect. Let's start doing the profit and loss calculation. So what I'm going to do is, because I couldn't use this page, I don't want to waste it. I'm going to do the profit and loss calculation here. So profit and loss calculation. What do I require for profit and loss calculation? Well, I need to know how many books have been sold and how many books are unsold. The sold book will give me a profit of 20 rupees. The unsold will be a loss of how much? Will be a loss of 30 rupees. So let's do this one thing at a time. What stock have you maintained? So stock. Now in that stock, how many books are unsold or sold? Let's do sold first. Sold, unsold, and profit, loss, total. Okay. If you are maintaining a stock of 15 books, how many books are sold? Let's go back. Can I say all the books are sold for all 20 periods? Yes. So 15 books over 20 periods is going to be 15 into 20, which is 300. So can I say 300 books are sold? How many unsold? 0. Every sold book gives you a profit of how much? 20. This is a loss of 30. So profit is going to be 300 books sold into 20. 3 2s are 6. 6,000. Profit. How much loss? 0 loss. Total give and take 6,000. Okay. What happens when you maintain a stock of 16? How many books are sold? Are all the books sold? No. There is this one particular period where there is one unsold book, and then another particular period where there is one unsold book, and that is why the total number of unsold books is 2. So when I maintain 16 books for 20 periods, I am technically holding 320 books, out of which 2 books are unsold, minus 2. So I am selling 318 books, 2 books are unsold. So I'm going to go back and I'm going to say 318 books sold, 2 books unsold. The 318 give me a profit of 20 rupees per book, which is 6360. So in profit, I make 6360. With a 30 rupee loss per book, I have to bear the loss for 2 books. 3 2s are 6, 60 rupees. Well, a profit of 6360 and a loss of 60 is a give and take of 6300. Is it the estimated profit with a 16 book stock more as compared to a 15 book stock? Yes, even though I have 2 books unsold which are giving me a loss. Fine, let's do this for 17. If I am maintaining 17 books in stock for a total of 20 periods, I have held 340 books in this entire period. But out of the 340, 7 books were unsold. So from the 340, when I remove the 7 books, I get 333. So books sold is 333, unsold is 7. 333 books sold at a profit of 20 is going to be 333 into 20 is 6660. So 6660. But 7 books unsold at what? At the rate of 30 rupees. 7 3s are 21. 210 rupees are lost. In the give and take, minus 210 is 6450. So 6450 is a net profit. When I maintain 18 books, what happens? When I maintain 18 books, I have 18 books unsold. So when I hold 18 books over 20 period, I am estimating I should sell, or I held 360 books, out of which 18 books were unsold. So how many were sold? 342. So 342 sold, 18 books unsold, 342 books. Profit at 20 per book is 6840, and 18 books at a loss of 30 per book. 18 into 30 is 540. Give and take is going to be 6840 minus 540 is 6300. Do you notice that the profit has dipped? Why? Because once the stock starts increasing, the number of unsold books becomes more, and an unsold book is a loss, and that is why the loss also keeps increasing. If I stock 19 now, it will drop even more because more number of books will be unsold. And like I told you, or if you understand this, you don't really have to do the entire table and check where what. It's simple. If I'm stocking 19 books, 5 times, it so happens that the demand is 18, which means 5 times I have 1 book unsold. 6 times I have 2 books unsold. 3 times I have 3 books unsold. And twice I have 4 books unsold. So the total number of unsold books is 5, 6 2s are 12, 3 3s are 9, and 4 2s are 8. Look at the total number of unsold books. The total number of unsold books is 5 plus 12 plus 9 plus 8 is a total of 34 unsold books. You know, if I do that for 19, what is it going to be? If I am holding 19 books, technically over 20 periods, I am holding 19 into 20, which is 380 books. Out of the 380, 34 books are unsold. So how many are sold? What is sold is 346. 346 sold, 34 unsold. The 346 sold will give me a profit of 20, which is 6920, very good profit. But the 34 unsold will be a loss of 30 per book, which is 1020. Give and take is going to be a loss or profit of 5910. You notice that? And you know why that happens? Because as it starts increasing, my total starts dropping. But see, this total is for a total of 20 periods. Let's take an average. 6,000 divided by 20 is 300. So on an average, every year I have a profit of 300 if I maintain 15 books. What about 6300 divided by 20? Well, there is a profit of 315 rupees. What if 6450 divided by 20? It's a profit of 322.5. 6300, 315, and 5910 divided by 20 is a profit of 295.5. Where do you see the most maximum profit? Where I see the most maximum profit when I stack or I stock 17 books. That's my answer. My suggestion to the manager is to stock 17 books. In the give and take, the expected profit is much more with 17 books. Let's move on and quickly look at their solution. So, their solution is here. Demand probability, cumulative probability, random numbers. From that, I predict the demand with the random numbers for 20 periods And what they have done is, they have only done it for 16, 17, 18. And I told you why only 16, 17, 18. Number one, with 15 books, you will never have unsold books. All books will always be sold. That is why you don't need to do this. You need to do this with 16, 17 and 18. So with 16 books, there are 2 books unsold. 17, there are 7 books unsold. And 18, there are 18 books unsold. Let's look at the profit and loss calculation. So 15 into 20, which is 15 books sold over 20 periods, is 300 books sold, is a profit of 6,000. Average is 300. 16 books, 16 into 20 minus 2. I hope you understand why the minus 2 is. They are first finding the number and then multiplying. So then they are saying 318 books sold. 318 books give you a profit of 20 per book, minus, so they are doing it on one only, minus 2 books unsold at a loss of 30 is a total of 630, average is 315, and so on. They've not done it for 19 because I told you, as and how you keep going higher, the losses are so much that they start eating out of your profits. And like I said, the best decision is to make 300 and is of a profit of 322, which is make stock 17 books. That's the best method. Here they've given you the profit and loss calculation. Last line. Since the profit is maximum for 17 books, order the optimal policy to order is 17 books per year. That's it. That is question number 2, if I'm correct. The next question that I want to do is on similar lines as this question, and that question is question number 7. What does the question say? The question says that a retailer deals in a perishable commodity. What do you mean by a perishable commodity? Well, perishable means something that gets spoiled very quickly. Like for example, fruits or vegetables. These are perishable commodities. On the other hand, grains are not perishable. They go on for slightly longer. So any food or food product becomes a perishable commodity. Okay, a retailer deals in a perishable commodity. The daily demand and supply are variables. So demand and supply both fluctuate. Okay. The data for the past 500 days shows the following demand and supply. So what they did is, for 500 days, they studied the demand and the supply. So suppose I have a store where I am selling, let's say something that, a bunch of women have come together and then they prepare it and they give it to me and I sell it. So suppose something like laddus. So what they do is they make and give it to me and then I supply. So there are two randomnesses here. It's not like the book. I can't just order any number and it will come. The problem here is the women produce also in random numbers and the demand is also random. So I can't guarantee both. I can't guarantee that if 10 people come to buy that product, will I be able to give 10? Sometimes I have more, sometimes I have less. So the demand is also random, the supply is also random, and they have given you the frequency with which this happens. So we've done frequency before, or we've dealt with frequency before. We don't deal with frequency, we change frequency to probability and then we continue. That is okay, that is secondary. What do you want me to do? The retailer buys the commodity at rupees 20 and sells at rupees 30 per kg. So on and off, can I say, if I analyze this or if I devise a result out of this, you are basically telling me that every kg I sell, I make a profit of 10 rupees. Any commodity remains at the end of the day has no sales value. So if I sell, I get 10 rupees per kg profit. If I don't sell, the entire thing is a loss. Remember in the previous question, if you don't sell the book, it's not like after 1 year the book is going to start rotting. That is not going to happen. But what will happen is the value of the book will reduce. You can't sell the book for the same value. Here they are saying that if you sell, fantastic, 10 rupees profit. If you don't sell, it is a perishable commodity. It is food. You cannot stock food and then sell it later. Well, there are other food products that you can do that with. This food product is a perishable food product, and after that day, you cannot sell it. Fine. Any commodity remains at the end of the day has no sales value, which means that if I have bought it for rupees 20, that entire 20 rupees is a loss. Moreover, the loss on unsatisfied demand is rupees 8 per kg. See here, if you don't sell, you will have to incur a loss. If you maintain extra, you have to incur a loss. If you maintain less, you also have to incur a loss. So there is a loss on surplus and there is a loss on stock out, both. In the book question, if a customer comes and goes back, that's okay. If that demand is unsatisfied, it's okay. But if you end up having more left with you than the demand, then it's a problem. Here both is a problem. If a customer comes and goes unsatisfied, problem. If you have anything left with you is also a problem. So this is the kind of a question where we will need to know if the demand is met, fantastic. If not met, are you short or are you extra? If you are short, then that will be a stock out, which is unsatisfied demand. If you are extra, then you have to bear a loss because that is going to be a direct loss. Given that the following pair of random numbers simulate 6 days sales, demand and profit. So they've given you pairs of random numbers 31, 18, 63, 84, 15, 79. Why? Remember the assembly line A1, assembly line A2 question? They had given you two assembly lines. The timings were different, but the probabilities were the same. No, sorry. Yes, I think. Here, there are different probabilities and they had given you random numbers as 4 numbers there. They said take the first 2 for A1 and the next 2 for A2. Here what they've done is they've given you 2 pairs. So here there is no confusion and there are only 6, which is the best part, not too much to calculate. The first random number in the pair is for supply and the second random number is for demand. Thank you very much. Step 1, whatever they ask you, all that is secondary. Step 1, changing the demand, the frequency of the demand and the supply to probability, cumulating it, creating a range. In the range, with the help of the random numbers, predicting the demand and the supply or the availability and the demand for 6 periods, and then the rest of the calculation will come later. So let's do that first. Let's start changing frequencies to probabilities. But like I said, it's too many tables to draw. So let me do one thing. Let me quickly get the tables ready. I have the table ready with me. What am I going to do here? Here I'm going to do availability, probability of that availability. They've called availability as supply also, which is the same. What I have available is what I can supply. Then there is demand and then the frequency of the demand. So here availability, probability of the availability, cumulative and range. Demand, probability of demand, cumulative and range. So let's come to one thing at a time. Availability, probability of that availability, cumulative probability and range. So 10, 20, 30, 40, 50. I have to change the frequency to probability. How do you do that? Take a total and then divide every value by that. They have already said that it's for 500 days, no? So this total has to be 500. But let's just be sure once again. So 40 plus 50 plus 190 plus 150 plus 70 is 500. Fantastic. So this total is 500. This will also be 500. Let's start. 40 divided by 500. So 40 divided by 500 is 0.08 or 8%, 0.08. 50 divided by 500 is 0.1. So 0.1. 190 divided by 500, I'll tell you how to do this. Remember when I told you when there is a 50 in the denominator, you multiply the numerator and the denominator by 2. So denominator becomes 100, numerator becomes the double. Here it's 500, no? If you multiply by 2, you are basically dividing by 1000. So 190 into 2 is 90 into 2 is 38. 380 divided by 1000 is going to be 3 places 0.38. Check. 190 divided by 500. 0.38. 50 will become 115 will become 300 divided by 1000 is 0.3. And 70 will become 140 is 0.14. Check if the total adds up to 1. If it does, then your calculation is correct. So 0.08 plus 0.1 plus 0.38 plus 0.3 plus 0.14 is 1. Perfect. Cumulated 0.08 plus 1 is 0.18 plus, so 0.18 plus 0.38 is 0.56 plus 0.3 is 0.86 plus 0.14 is 1. Perfect. Range. Imagine that you are multiplying this by 100. So this will become 8. Stop one number before that. So 0 to 8. So this is going, 0 to 7. This is going to be 8 to 17. This is going to be 18 to 55. This is going to be 56 to 85. And this is going to be 86 to 100. That was availability. This is demand. What are demands? 10, 20, 30, 40, 50. I will change the number of days to probability of that demand. I will change probability to cumulative probability, and lastly I will make that into a range. Again, the total is 500. 50 divided by 500 is basically, multiply that by 2 becomes 100. 100 divided by 1000. 100 divided by 1000 is going to be 0.1. Check. 50 divided by 500 is 0.1. 100 will become 200. So this will become 0.2. This will become 0.4. This will become 0.2. And this is 40. 1 minute. I think I've copied something wrong. Let me just check once. Sorry, I copied this wrong. This is not 100. This is 110. Because then this 40 should compensate with someone, no? Sorry about that. So this is 0.22 if I'm right. 4 2s are 8. So this is 0.08. Let's check what the total is. The total is 0.1 plus 0.22 plus 0.4 plus 0.2 plus 0.08. Is the total 1? Yes. Fantastic. Let's cumulate. 0.1, 0.32, 0.72, 0.92 and 1. range. This is basically 10. So it is 0 to 9, 10 to 31, 32 to 71, 72 to 91, 92 to 100. Sorry, I wrote 100 by mistake. Should stop one value before. So 99 and 90. Sorry about that. Done. What am I going to do? With the help of the random numbers now, I am going to predict what my availability is and predict what my demand is. So let's begin then. This is happening on a daily basis. So can I say this is day 1, day 2, day 3, day 4, day 5 and day 6. Random number for availability. That will give me an availability. Then I will have a random number for the demand, and that will give me a demand. Let's go back and write down the random numbers. What have they said? They have said that the first two random numbers are for supply, which is availability, and the second two are and the second random number is for demand. Okay then. So this is 31, 18. Then there is 63, 84. Then there is 15 and 79. Then there is 7 and 32. Then there is 43 and 75. And lastly, there is 81 and 27. Fantastic. So I have my random numbers. Let's begin the prediction. 31 in availability. 31 falls here, 18 to 55. So the availability is 30 kg. 63 is here, 40. 15 is here, 20. 7 is here, 10. 43 lies here, so 30. 81 lies here, so 40. Let's do the same for demand. 18 lies here, so 20. 84 lies here, so 40. 79 lies here, so 40. 32 lies here, so 30. 75 lies here, so 40. And lastly 27 lies here, so 20. I have done with my prediction of the availability and the demand for 6 days. Now what do we do? Let's go back to the question. The question said that the retailer buys the commodity for 20 per kg and sells it for 30 per kg. Okay. Any commodity remains at the end of the day has no sales value. Okay. Moreover, loss of unsatisfied demand is 8 per kg. Giving the following pair of random numbers, simulate 6 days of demand, sales, demand and profit. So you basically want me to calculate profit with the given demand and sales. So what is going to happen is, I am going to incur, there I incurred profit on sales and I incurred loss on anything that is left. Here I am going to make profit on sales, but I am going to make a loss on 2 conditions. Condition number 1, what if there is anything left, which means surplus? You will end up a loss. How much loss? Everything will be a loss, the entire 20 rupees. And what if I have an unsatisfied demand? Well, then in that case, it's a 8 rupee loss per kg. So what I need to know is, what is your sales? Do you have any surplus? And number 3 is, did you stock out? Let's start analyzing and then we will do the final profit calculation. Now see, this that I am doing now this is what I am doing, what I feel like. Everybody does it in a different way. The institute must have done it in a different way. You do it as and how you understand it. All we need to know is what the profit is. How you calculate the profit is none of my business. Let's start. The availability with me is 30 units. So I have 30 kgs of, let's say, sweets in my shop. How much have I sold? Well, the demand is only 20. So you've sold 20. So your sales is 20 kg. Do you have a surplus or have you stocked out? Well, I have a surplus. How much? A 10 kg surplus. Then you will not stock out. You will either stock out or surplus. There might be where demand exactly meets supply. So no surplus, no stock out. Let's go to the next one. Availability is 40, demand is also 40. Then you make a sales of 40, no surplus, no stock out. Availability is only 20 kg, but the demand is for 40. How much will you sell? Well, if the availability is 20 kg, I am only going to sell 20. Do you have surplus? Yes? No, I don't have surplus. I had a demand of 40, out of which I sold 20, which means the rest of the 20 people came, didn't get anything and went, which means I had stocked out for the rest of the 20 units. The availability is only 10 and the demand was of 30, which means I will sell 30. Do I have surplus? No. I have a 20 unit stock out. The availability is 30. The demand is 40. How much will I sell? Well, obviously 30 units will be sold. But the demand is 40. I agree. The 10 people per kg will come and go unsatisfied. So stock out or unsatisfied is going to be 10 kg unsatisfied. And lastly, the availability is 40. The demand is only 20. How much will you sell? 20. Are you surplus? Yes. By how many units? 20 units surplus. Okay. Let's do the profit calculation. These 20 that I sold give me a profit of how much? I'm buying for 20 and selling for 30. Is that right? Isn't that what the question said? You are buying for 20 and selling for 30 and unsatisfied demand is 8 rupees, and if it is unsold or it is surplus, then it's a direct 20 rupee loss. So these 20 units that I sold is going to give me a profit of 20 into 10, which is 200. But do you realize that I have 10 units extra with me? And these extra 10 units are going to be unsold and I will have to throw them out. I had bought them for 20 rupees per unit. 20 into 10 is 200 and the loss and profit is 0. Because whatever I made out of selling the 20 units, I lost it because of this surplus. Let's go to the next one. 40 units sold at 10 rupees. Fantastic. 400 rupees in profit. And there was no surplus, no stock out. Fantastic. So a total 400 rupee profit. Nice. Let's come to the next one. I made a sales of 20 units. So I get a profit of 10 per unit or 10 per kg is a total of 200. But there were 20 rupees of stock out, which means customers came to me and I told them, I'm sorry, I don't have any number of units. Well, in that case, you have to incur a loss at 8 rupees per kg. 8 into 2 is 16, 160. Give and take is a 40 rupee profit. I made a sales of 10 kg with 10 rupees per kg is 100 rupees. But I had a 20 unit of stock out, and a stock out costs me 8 rupees, minus 160 is a negative of 60 or a loss of 60 rupees. Let's come to the next one. I sold 30 units. 30 kg at 10 rupees per kg is 300 rupees of profit. But for 10 units I had stocked out, which means 80 rupees is going to be a loss, which is going to be 220 rupees. And lastly, I made a sales for 20 units. Fantastic. So you made 200 rupees out of that sale. But I have a surplus of 20 units. These surplus 20 units will be sold. No, can't be sold. Throw them out. If I throw them out, every unit costs 20 rupees. 20 into 20, it's a 400 rupee loss. So it's a 200 rupee net loss. That's it. That's my answer. Is there anything else that they are expecting? Let's read the question. The question says that given the following random numbers, simulate 6 days of sales, demand and profit. And yeah, that's it. Just simulate 6 days of sales, demand and profit. Fine, I've done that. Let's see what they have done. Table number 1, changing number of days, which is frequency to probability, cumulate range. Now this way of writing range is very stupid. Nobody does that. This is wrong. You skip this and directly write this. After doing that, the same for demand. Demand, probability, cumulate, range, done. Let's go to the simulation. So I have done everything in one table. They have done separate tables. So what they have done is they have simulated the supply for 6 days, simulated the demand for 6 days. After doing that, they have gone to a new table for calculation. So they have written day, supply and demand. So the only thing that is not written is random numbers. I have done it with random numbers. Now see what they have done. Their way of calculating is very different. They have done a sales revenue separately, and then they have done a cost based calculation. So what is my cost and what is my sales? So I'll tell you how they have done it. Pay attention here, I'll tell you. So you know what they did? They did this. You had available 300 units. How much did you spend to buy these 300 units? Well, I spent 20 rupees per unit. So I spent 600 rupees. Okay. So 600 rupees was the cost. So they made one column and they wrote cost. Okay. What was your demand? 20. So you sold only 20. How much does one unit sell for? 30 rupees. Okay. Then what is your revenue? 3 2s are 6. 600. Cost is 600. Sales is 600. Cost and sales. Subtract 0. That is why 0. Let's come here. Availability is 40. So how many units did you buy? 40 at 20 rupees. So 4 2s are 8. 800 rupees is the cost. What is the sales that you made? Well, I sold all 40 because the demand was 40. You sell at 300 rupees. Sorry, 30 rupees. 4 3s are 12. So sales revenue is 1200. Difference between the two is 400. Is that right? Yes. Let's go to the next one. I have available 20, which means I bought 20. What is the cost to buy that 20? Well, the cost to buy the 20 is 20 into 20, which is 400. The demand was for 40, but 1 minute. Can I sell 40? I have available only 20. So I will sell only and only 20. So 20 units I will sell at 30 rupees. But the remaining 20 will be a loss of 8 rupees. So the cost is 400. Sales revenue is 600. And then there is a loss of 160. So from 600, when you remove 400, you get 200. But from that, when you remove 140, you get 160, you get 40. So like I said, everybody has a way of calculating it. Just check if your last column and their last column tallies or not. 0, 440 minus 60, 220 minus 200. Let's check. 0, 440 minus 60, 220, negative 200. Perfect. They have told you below how they have calculated it. You can also do that. And that's it. They didn't ask you to draw any inferences from it. All they asked you to do is project, demand or predict sales, demand and profit for the next 6 periods. That's it then. That's going to be your answer. The next question that I want to do is slightly different again, and that is question number 9. Again, 2 data sets given to you. What does the question say? A businessman is considering taking over a certain new business. Okay. Based on the information on his own knowledge and his own knowledge of the business, he works out probability distribution of monthly cost and sales revenue as given. So what his knowledge is and understanding the business, he has made a probability distribution of 2 things. One is a monthly cost and the other is a monthly revenue. And that is there in front of you. Cost, the probability, sales and the probability. What do you want me to do? Using the sequence of random numbers to be used for estimating costs and revenue, obtain the probability distribution of monthly net revenue. So they want you to find the monthly net revenue. For how many periods? Not mentioned. Okay, so what you want me to do is for every month, predict a cost, predict a revenue, and then find out what the net revenue is. Fine, I can do that. But why have you given me like sequence 1, sequence 2, sequence 1, sequence 2? Well, sequence 1 will be for the cost, sequence 2 will be for the revenue. Then why again? Well, because they've said repeat the analysis in A by using the random number streams. So they want you to do the question twice with 2 different sets of random numbers. Obviously, I'm going to do it with the first one only. The second one is your job or the second one is homework. So let's start off with the question. What will we do? Well, I will start with the basic that has to be done in every question. That is cost, probability, cumulate, range, revenue, probability, cumulate and range. So let's do that first. And like I said, too much to do. So I will quickly get the tables ready. Let's begin. These are my costs, these are the probabilities, this is my revenue and these are the probabilities. So the first thing that I'm going to do is cost, probability of that cost, cumulate the probability and create a range out of it. Then here you have revenue. You write down the probability of the revenue, cumulate the probability and lastly find the range. One at a time. 17,000, 18,000, 19,000, 20,000, 21,000 with probabilities of 0.10, 0.10, 0.40, 0.20, 0.20. Cumulate them. 0.10, 0.20, 0.60, 0.80 and 1. Range. This is basically 10. So 0 to 9, 10 to 19, 22, 59, 62, 79, 82, 99. Revenue 19,000, 20,000, 21,000, 22,000, 23,000, 24,000. Probability 0.10, 0.10, 0.20, 0.40, 0.15, 0.05. Cumulate the probability 0.10, 0.20, 0.40, 0.80, 0.95 and 1. Range, this is basically 10, so it is 0 to 9. Then this is 20 to 19, 20 to 39, 40 to 79, 80 to 94 and 95 to 99. Done? What am I going to do? They have given you 20 random numbers, or are they more than 20? I think they are 20. I didn't count them well. So the random numbers will be 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Correct. 10, 10, 20 random numbers. And like I said, that 20 will definitely not fit here. So what I will have to do is, I will have to create a new table on another page, because this page is definitely not going to take those random numbers, because there's hardly any place left. 20 numbers will not fit here. So let me do one thing. Let me quickly get another table ready. So I have my second table ready. How do I know that all these columns are required? Well, I didn't check. All I do is I say to myself, what do you need? This is happening on a daily basis, monthly basis or a weekly basis. This is happening on a monthly basis if I'm correct. Is this monthly data? Monthly costs and sales. So this is monthly data. So can I say column number 1 is going to be month? Correct? So this is going to be month, or this can be month. After that, you are going to have random number for cost, random number for revenue, and then you are going to have net. So I can start with a month here. Month 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19 and 20. After that, I have random number for cost. Cost is given to us first. Yes. So random number for cost will be 82, 84, 28, 82, 36, 92, 73, 36, 92, 73, 91, 63, 29, 91, 63, 29, 27, 26, 92, 27, 26, 92, 63, 83, 2, 63, 83, 2, 10, 39, 10, 10, 10, 39, 10 and 10. So with the random number of the costs, I will estimate the cost. Then I will have random number for revenue, which will give me the revenue. And then after that, I will calculate a net revenue. Let's do the random number for revenue. 39, 72, 38. 39, 72, 38. 29, 71, 83. 29, 71, 83. 19, 72, 92. 19, 72, 92. 59, 49, 39, 72. 49, 39, 72. 94, 4, 92. 94, 4, 92. 72, 18, 9, 72, 18, 9 and 0. Let's start the prediction. Let me get rid of the PDF, and what I'll do is I will keep the table parallel so that I have both in one place. We are going to start with the cost. Am I right? Yes, perfect. 82 falls here last, so the cost is 21,000. 84 again last, so the cost is 21,000. 28 falls here, so it is 19,000. 82 falls here, so it is 21,000. 36 falls here, so it is 19,000. 92 falls here, so it is 21,000. 73 falls here, so it is 20,000. 91 falls here, so it is 21,000. 63 falls here, so it is again 20,000. 29 falls here, so it is 19,000. 27 falls here, so it is again 19,000. 26 falls here, so it is again 19,000. 92 falls here, so it is 21,000. 63 falls here, so it is again 20,000. 83 falls here, so it is again 21,000. 2 falls here, so it is again 17,000. 10 falls here, so it is again 18,000. 39 falls here, so it is again 19,000. 10 falls here, so it is again 18,000. And 10 falls here, so it is again 18,000. Correct? The same has to be done for revenue. Revenue is here. 39 is here, so it is going to be 21,000. Can I say one thing? It's just a stupid time waste for no reason. Can I pause, write it down and come back so that we don't waste too much of time? This is it. This is my predicted revenue and my predicted cost. Let's start calculating what my net revenue will be. So, I have spent 21,000 rupees and I had a revenue of 21,000 rupees. Can I say neither profit nor loss? Costs are 21 and revenue is 22. Fantastic. Can I say it's a 1,000 rupee profit? Revenue is 21, costs are 19. 19, 20, 21. Can I say it's a 2,000 rupee profit? No profit, no loss. 19, 20, 21, 22. 3,000 rupee profit. This is going to be a 2,000 rupee profit. This is going to be neither profit nor loss. 1,000 rupee profit. 3,000 rupee profit. 3,000 rupee profit. 3,000 rupee profit. 19, 20, 21. 2,000 rupee profit. This is going to be a 1,000 rupee profit. This is a 3,000 rupee profit. This is a loss because the costs that I have incurred are 21,000 but the revenue is only 19. Then can I say it is a 2,000 rupee loss? This is a profit of 3 and 3, 6,000 rupees. This is a profit of 4,000 rupees. So 18, 19, 20, 21, 22. 19, 20, 1,000 rupee profit. This is going to be a 1,000 rupee profit and this is going to be a 1,000 rupee profit. Done. I have predicted the net revenue for all the given random numbers. What else do you want me to do? Let's come back to the question. What does the question say? Well, the question says, use the following sequence of random numbers. Use the following sequence of random numbers to be used for estimating cost and revenue. Obtain the probability distribution of the net monthly revenue. Done. I don't think there is any analyzing asked to be done. So done. This is it. They are also expecting the last column, which is the net revenue. And that is what we have given them. This is what we also have. Oh, they've calculated an average. But when you look at the table, no, there is no average asked, I think. No average is asked, but they've still given it. It's okay. They should be a little clear about the average, not that it was really asked. So let me quickly find the average. It is going to be 1000 plus 2000 plus 3000 plus 2000 plus 1000 plus 3000 plus 3000 plus 3000 plus 2000 plus 1000 plus 3000 minus 2000 plus 6000 plus 4000 plus 1000 plus 1000 plus 1000 is a total of 35,000. But this you've done for 20 months. So total revenue is 35,000 rupees. Average revenue is 35,000 divided by 20, which is total net revenues. Average net revenue is 35,000 divided by 20, and the answer is 1750. So I can expect a profit of 1750 on an average. That what is that they have done. Yes, 1750. Not that it's asked, but they've calculated it. So we also calculate it. In the exam, obviously, they will be a lot clearer about what they want you to find. The next question that I want to do is on similar lines, which is almost exactly like this question that we did, but there is something slightly different about it, and that is, I think I've lost the question. No, I found it. That is question number 3. What does the question say? The question says a small retailer has studied the weekly receipts and payments over the past 200 weeks and has developed the following information. So here also, if you notice, it's like cost and revenue. Here they have managed receipts and payments. What do you receive and what do you have to pay? Okay, receipts and payments. There are 4 receipts, which is 3,000, or you can receive 3,000, 5,000, 7,000 or 12,000 with these probabilities. You might have to make payments of 4,000, 6,000, 8,000 and 10,000 with the probability of this. What do you want me to do? Using the following set of random numbers, simulate the weekly pattern of receipts and payments for 12 weeks of the next quarter. A quarter is how many months? 3 months. A month is 4 weeks, 4 threes are 12. So for 12 weeks, they are asking you to simulate. What are they asking you to simulate? Payments and receipts. Assuming further, okay, so you want me to simulate that or predict that, and then what? Assuming further that beginning bank balance is 8,000, what is the estimated balance at the end of a weekly period? Oh, so what you want me to do here is, you want me to check the receipts, check the payments, and then check what the difference is, and then assume that the beginning bank balance is 8,000 rupees. Then if I have received money, it will add to the 8,000. If it's a loss, it will take away from the 8,000. And that is how you want me to keep continuing for 12 periods? Fine. Whatever you ask me to do, I can't do this without the first basics, and that is step 1 in this is going to be, I'm going to write down the receipts probability, cumulate the probability range. Payment, probability, cumulate the probability range. After that, using these 12 random numbers, are they 12? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Perfect. So they are 12. So for these 12 random numbers, I will predict the receipts and I will predict the payments. That much is basic. After that comes the rest. Fine then. So the first and the most basic thing that we have to do, that is get this in writing. Again, tables to be drawn. Let me quickly get the tables ready. I have my tables ready. Weekly receipts probability, weekly payments probability. So number one, what do I receive? The probability of what I receive. Then the cumulative probability and range. So I receive 3,000, 5,000, 7,000 and 12,000. Probabilities are 0.20, 0.30, I'm sorry, 0, 0 and 0, 0.30, 0.40, 0.10. Cumulate them 0.20, 0.50, 0.90 and 1. Range, this is basically 20. So 0 to 19, 20 to 49, 50 to 89 and 90 to 99. Payments. So payments are 4,000, 6,000, 8,000 and 10,000. Then the probability of those payments 0.30, 0.40, 0.20, 0.10. Lastly, cumulating the probability is 0.30, 0.70, 0.90 and 1. Let's create a range out of this. 0.30, sorry, I think I made a mistake somewhere. This is 0.40, sorry. So no, correct. Sorry, I made a mistake. This is basically 30, so this is 0 to 29, correct? Then this is 30 to 39. Then this is 40 to 89. Correct? Yes. Is there a... No. I think I messed up the entire table. Just give me 1 second. This is the little that I have done. Sorry, because I didn't want to draw the entire table again. Too much pain. So, if I accumulate, this is 0.30. Perfect? Oh, nice. This is 0.70. This is 0.90 and then this is 1. Not bad. When I create a range, this is basically 30. So 0 to 29. Then this is 30 to 69. Then this is 70 to 89. And this is 90 to 99. Nice. So, weekly receipts, probability, weekly payments, probability. So, I created a range out of the two. Now, after doing this, what do they want you to do? Number one, predict. This is weekly. So, week 1 to 12, that's going to be the first column. So, this is week 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 and 12. 12 weeks. For these 12 weeks, I am first going to have a random number for the first one, receipts. Then I am going to have receipts. Then I am going to have random number for payments. And I am going to have payments. And here I am going to write down a net balance. with an opening balance of 8,000 rupees. Okay, let's first write these down, the random numbers. Let me bring that out. The random numbers are 3, 91, 38, 55, 17, 46, 32, 43, 69, 72, 24 and 22. Let me quickly write that down for payments also. So I've written it down so that we don't waste time. Done? Yes. Let's begin the prediction then. Let's hope both fit on the page. Just about, but that's okay. Yes. 3 comes from here. So I'm going to receive 3,000 rupees. 91 comes here, 12,000 rupees. Then 38 comes here, 5,000 rupees. 55 falls here, 7,000 rupees. 17 falls here, 3,000 rupees. 46 falls here, 5,000 rupees. 32 falls here, 5,000 rupees. 43 falls here, 5,000 rupees. 69 falls here, 7,000 rupees. 72 falls here, 7,000 rupees. 24 falls here, 5,000 rupees. And 22 falls here, 5,000 rupees. We are going to do the same for payments. 61 falls here, 6,000 rupees. Then there is 96 falls here, 10,000 rupees. 30 falls here, 6,000 rupees. Then there is 32 which again falls there only, 6,000 rupees. 3, 4,000 rupees. 88, 8,000 rupees. 48 is 6,000 rupees. Then there is 28 which is again 4,000 rupees. There is 88 which is 8,000 rupees. 18 which is 4,000 rupees. 71 which is 8,000 rupees. And lastly 99 which is 10,000 rupees. Done? Let's start finding the net balance then. My opening balance is 8,000 rupees, in which I receive 3,000 more. So 8,000, 9, 10, 11. 11,000. From the 11,000 I have to pay off 6,000. I am still a positive 5,000 rupees. Yes. In the 5,000 I receive 12,000. 5 plus 12 is 17. From which I have to give away 10,000 or pay 10,000. So 7,000 is the net balance. 7,000 rupees, I receive 5,000. 12,000, from the 12,000 I give away 6,000 rupees. 6,000, 7,000 I receive, which is a total of 6 plus 6 is 12 plus 1 is 13,000 rupees I receive, from which I pay off 6,000, which means I am left with 7,000. 7,000, 3,000, 10,000 is my total I receive, from which I pay off 4,000. I am left with 6,000. 6,000, 5,000 is going to be 11,000, from which I pay off 8,000. 8, 9, 10, 11, 3,000 rupees positive. Is that right? Yes. 3,000, 5,000. Total of 8,000. So opening balance is 3,000 and then I receive 5,000. So 8,000. 8,000 I receive. 6,000 I have to pay off. 2,000 rupees net balance. 2,000 balance. 5,000 receive. 7,000. 4,000 I have to pay off. 3,000. 3,000 balance. 7,000 receive. 10,000 from which I pay off 8,000. 2,000. 2,000 is my balance. 7,000 I receive. 7 plus 2 is 9,000. 9,000 I remove 4,000 which I pay off. So I am left with 5,000. 5,000, 5,000, 10,000 from which I pay off 8,000. So I am left with 2,000. And lastly 2,000, 5,000, 7,000 from which I pay off 10,000, which is a negative 3,000 balance. Is there anything that they are asking us to do? Let's check. Sorry. So the question says, using the following set of random numbers, simulate the weekly pattern of receipts and payments for 12 week quarter, assuming further that the beginning balance, bank balance is 8,000 rupees, estimate the balance for the end of 12 weekly period. What is the highest weekly balance, okay, during the quarter, and what is the average weekly balance for that quarter? So number one is highest and the other is average. See here, they've specifically said give us the average. Previous question they didn't mention, they should have mentioned. Anyway, the highest balance, highest weekly balance is, I think 7,000. There is two 7,000s. That's it. And average, I will have to take a total. Take a total of 5 plus 7 plus 6 plus 7 plus 6 plus 3 plus 2 plus 3 plus 2 plus 5 plus 2 minus 3 is 45. So basically total is 45,000 right here. This is for 12 periods. Total weekly balance is 45,000. Average weekly balance is 45,000 divided by 12. What is 45,000 divided by 12? 45,000 divided by 12 is 3750. So 3750. So the answer is 7,000 and 3750. Let's check if they have the same answers. So yes, receipts probability, cumulative probability range, payment probability, cumulative probability range. Next, so this is the table where, see, they have shown you the first calculation. 8,000 plus 3,000 that you receive. So 8 plus 3 is 11, from which you pay off 6,000, so the balance is 5,000. Fantastic. And see, what they've done is the negative 3,000 is put in a bracket. And you all know this, the commerce students, or the criteria is wherever there is something negative, you write it in a bracket. I'm not a commerce student, being a science student, so for me, negative profit is negative profit. I write it as negative. Anyway, coming back to estimated balance for at the end of 12 weeks is a negative 3,000. Oh, they've asked you that. Sorry, I missed that part. The estimated balance for the end of 12th week is negative 3,000. Okay, highest balance is 7,000, perfect, and average balance is 3750. That also is perfect. Fine. This has already become a rather lengthy question. How many questions have we done with? How many left? I think there were a total of 9. Question number 1 is done. So that is 1. 2 is done. 3 is done. Just now I think we did that. No, correct. 3 is done now. Then 4 is done. First session. 5 is not done. 6 is not done. 7 is done. 8 is done. We did it on the first day. And 9 is done. Okay, so we've done 7 questions. 2 are still pending. Let's stop this right here and I will do them in the next session. Thank you very much. Bye.